Hello everyone, welcome to this episode of Market Pulse. My name is Ajit Mahuli, the founder and mentor at LearnPriceActionTrading.com. Let's take a look at what Nifty has been doing last week and what it is likely to do this week, which is going to be the uh, up to 30th Jan. So a lot of events coming up in this week and next week, so we'll have to be cautious about the markets. On the monthly chart, markets are seeing again more rejections. They are unable to go beyond that 18,400 levels. So a strong sell-off happened. That's the monthly demand zone, which is now looks more likely that we will probably in the next few weeks or a couple of months we're going to hit this area of demand zone where we can look at taking some swing long positions, but till then buying is not allowed unless we have some confirmation. On the monthly, the trend is still up, but it has now been range bound and has made a new low at around 16,400. It could possibly further go down below. So be cautious about aggressive long positions. On the weekly chart, after that super move in the last 3 weeks, most of the gains have been erased in these 2 weeks fall, a non-stop fall. We have come into an area of demand zone, which may push prices up a little bit above. Let's take a look at where it is going to do that. That's a weekly demand zone. We are moving up from this original weekly demand zone. That's the original weekly demand zone from where we are moving up. There is a good chance that we may retest those levels or whatever are there on the smaller time frames. So, and the weekly trend is it's more or less sideways, but if we start going further lower, we could again resume the downtrend on weekly as well. On the daily chart, that's what we have. So last week when we spoke, I had mentioned that we are in an area of supply zone, which is a very good supply zone, and it may hold and push prices down all the way up to 17,300 and 200. That's where we have come. We have gone a little bit deeper into this. We should exercise caution and not be in a hurry to buy. Maybe let this fall get arrested, and as it starts turning, then you can look at buying some the quick trades on the long positions in the index if you're an index trader, and this might still hold the prices from going above. So that is going to be the range now that we are going to see for Nifty and Nifty on the daily chart. So maybe around 16,800 all the way till 17,700. That's a range we are looking at. So we also have Fed meet this week and budget next week, expiry this week, some more results coming out. So be cautious, don't get aggressive. Market are looking weak. They might further move down. So it's advisable to be light on long positions and wait on the sidelines before we get some kind of confirmation that the market is now ready to move up. Just to give you the smaller time frame areas, so that is the area where it is likely to probably tomorrow move up around 16,900, and that's the area. So we have multiple smaller time frame supply zones, which probably we may reach prior to the budget. So that's going to be the crucial one here on the smaller time frame at around 17,800 to 900. So probably that is where we might again start coming down if at all we move all the way up there as a pre-budget market rally. And as I had also explained in the last session, India VIX is on the move. So after hitting that high, it came down, picked up, and started moving up. So this is going to go up. Volatility is there to stay for a while, and you could see India VIX moving at least up to 26, if not more. So be cautious. Don't try to chase stocks in this volatile market. The swings are going to be really wild. So you could see markets moving up in a broader range for the next 2 weeks, let's say about 17,800 to 16,800. That's quite possible. So be careful about buying only once we go about 2,600 and 26 on the VIX, and maybe we'll be at around 16,800 Nifty. That would be a good area that you might want to see as a short-term trade based on confirmation. to be taken. All right, so cautious approach. Don't get aggressive on the long side. Wait for pullbacks to get into short trades. Hello everyone, welcome to this episode of Market Pulse. My name is Ajit Mahuli, the founder and mentor at loanpriceactiontrade.com. Let's take a look at what Bank Nifty has been doing and likely to do in the coming week. On the monthly chart, though we are trending up, this is a very congestive price action, which could lead Bank Nifty again come down all the way to this area of demand zone. That's quite possible. Maybe budget could be the trigger for it to move down. Long-term position still can wait, and probably below 33,000 is what you can look at. On the weekly chart, we did go up very nicely, but we were short of this weekly supply zone here. No, we did hit that weekly supply. On the weekly chart, that's where 39,000 and then started falling. That's where the next area of demand zone is on the weekly chart, which might still hold. So if Bank Nifty continues to fall, let's say tomorrow, that's the area where you can look at a bounce expected. Maybe this is where the pre-budget rally on the index will start. So that's the range as of now for the index. On the daily chart, that's the area where we probably might move. But right now, Bank Nifty is also in a smaller time frame demand zone, which could again push prices up. We have formed new areas of supply here. So upside is not really great unless we have some strong triggers. Looking at the global markets and the volatility increasing, India VIX increasing, the markets are going to have wild swings, and we could test extreme levels. So be cautious about it. Don't be in a hurry to get into aggressive positions or swing positions. Swing positions will have to wait. You might start trading on the short side or do range trading for intraday or short-term income. That will be a good area if Bank Nifty comes before budget to look at some stronger stocks and try to trade the rally. So that's the area where Bank Nifty is moving. We do have some good areas of demand zone on the smaller time frames, which are pretty much low on the curve. But looking at the overall global market scenario, markets could turn from any of these. So be cautious, let the market stabilize, and then you can go long. This now, having said that, this demand zone might still hold and push the prices up tomorrow, up to this at least, let's say 37,000. 300 on the index, so that will be the range for short-term income trading, and for swing trading or a little bit more, we could expect about 38,000 to 36,000 could be the range for Bank Nifty in the coming week. Remember, we do have a holiday on Wednesday, so it's a shorter week for trading. Be cautious, look at good stocks to enter. Volatility is on the rise, so don't try to be too aggressive in this market.